Hi everyone, my name is Michelle.
Hi, I'm Leonard.
Today we're going to discuss about interest rate. Interest rate is at all-time high now. Is it a good time to buy properties? Maybe Leonard, you can share with us on why is the interest rate high today?
So as we know, today we are in a high inflationary environment today. Across the globe, we are also experiencing this. So in order to curb inflation, right, the government across the world are also raising interest rate. Yeah, this is to tackle inflation. That's why we are in a high inflation environment and also high interest rate environment today.
Okay, maybe you can also give us an example. So as compare in terms of monthly installment, as compare, previously when on average maybe 1/2%, as compared to now it's maybe over 4%. What are the, in terms of monthly installment, what is the difference between, during the low and the high interest rate?
Yeah, so maybe we just take a simple example because household income is about $10,000 in year 2022. So a household with $10,000 income can afford about a 1.4 million private property. So if you talk about lower interest rate in previous times, let's take for example 2.6% interest rate. So based on 1.4 million property, 2.6%, maximum loan of 75%, we are looking at about 4,200 of a monthly installment. So if the interest rate were to increase, right, in today's context, up to 4.2%, household will be paying about 5,134 in terms of the monthly installment a month. So the difference, right, will be about $900 different.
So do you think, will the interest rate remain high as in, at 4.2%? Because you see there's a difference of $900. It sounds a bit scary. What do you think?
Okay, so of course, it sounds scary if we were to maintain at this 4.2% interest rate in the long run. But do you think it will last forever? Because last time, in previous time, we had interest rate of about 1%, 2%. So if you take a longer term view, 5 to 10 years, you will see that buying properties, you will average out the interest rate at about 2% to maybe 3%. So it's not always that high. So you actually have to take the average.
Yeah.
And previously we also enjoyed very low interest rate.
Yes.
Yeah.
So actually buying property is not a short-term investment. It's more of the mid to long-term. So, average out, it's not as scary as we thought it is. So the next thing is, should we get the fixed rate or the floating rate? As you know, now the fixed rate is it's actually lower than the floating rate. So what are your take on this?
Okay, so the fixed rate, right, surprisingly is actually lower than floating interest rate. In fact, fixed interest rates have gone down to approximately 3.3% range, whereas if you were to go for floating interest, possibly it will be around 4.2%. So there's actually a gap between fixed and floating. However, it really depends on your risk appetite and how fast do you think the interest rates will start falling. But in my personal opinion, right, you may want to go for maybe a 1 to 2 years fixed interest rate so that your monthly installments will be certain. So you don't have to guess what will be your next installment. So it's actually fixed for the next 1 to 2 years. So it gives you a sense of certainty as well.
So in the market, there's actually resale and new launch properties. So why are some buyers looking at new launch properties?
Yeah, so in the market there are resale as well as new launch properties, right? But for new launch, because the property has not been constructed yet, so the payment tend to be in a progressive payment. So as the construction progresses, right? For example, the foundation, the framework, the wall, the ceiling, the windows, the car park, and then subsequently TOP is done, then the monthly installment will gradually increase. So it's not like resale whereby straight away after completion you will start paying the full monthly installment. Yeah, so you can actually better manage your cash flow when it comes to new launch properties.
So, like now, so the thing is to buy or not to buy.
Yeah, so I guess if you are financially able to afford, right, especially if you have like sufficient buffers in your CPF ordinary account, and also in terms of cash, you have spare cash, right? You may consider to go in because although it's a high interest rate environment, right? Some buyers are holding back, so the tendency of you being able to spot a good deal may also be higher. Whereas if you just think about it in a lower interest rate environment, right? For example, 1% interest, maybe many buyers will be flocking to view resale or even new launch properties.
Yeah, so for loans, right, MAS has actually a guideline of 4% for the stress test, of which they actually have revised it from 3.5% to 4%. But actually, have you noticed that the banks are actually using a higher percentage for the stress test?
Yeah, so actually in today's context, right, the banks are using about 4.7% for their internal stress test. Reason is because interest rate has already breached the 4% mark, which is MAS guideline. So because of that, the banks are using a higher stress test percentage. Also, the banks are encouraging property investors and purchasers to be more prudent in terms of their purchase. So they want you to be able to afford your money installments comfortably.
Yeah, so actually, as compared to car loans, credit card loans, and even renovation loans, right? Actually, why is that, take property loan is considered one of the best loan to take in Singapore?
Yeah, so if you look at all the other loans in the market out there, like car loan, renovation loan, and so on, actually only property loan is based on a reducing balance if you compare with car loan or renovation loan. So apart from that, right, property is also usually on uptrend, so usually it appreciates over time. Whereas for car and renovation, it may not be so.
Yeah, so we usually see, seasoned property investors taking maximum leverage. Why is that so?
Yeah, so you see in real estate investing, right, most of us will go for 75% maximum leverage. Reason is because we want to maximize our returns on equity. Otherwise, we may be better off just investing in other vehicles like real estate investment trusts.
So how about, for those who are worried about the current high interest rate environment when it comes to property investing, what are the other ways that we can consider, when to hedge against the high interest rate?
Yeah, so you see, although property interest rates are high today, right? But there are also other, things that you can invest with your spare cash. Things like, fixed deposits, Singapore savings bond, or even treasury bills. This will help you to actually hedge against the property interest rates.
Yeah, so by the way, we are also practicing real estate brokers. So if you would like to find out what are your options available, or you are interested in our free property portfolio planning session, please do feel free to reach out to us.
Yeah, and also do know that our sharing is based on our personal opinions, and every individual has their own preference and risk appetite.
Yeah, so once again, my name is Michelle.
And I'm Lennon.
So please like and subscribe to our channel, and we'll see you soon. Bye.
Bye.